Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome. This is the Wealth Without Wall Street podcast. Your host, Joey, the Italian Stallion Murray, joined as always by Russ, the idea guy Morgan. All right. So Russ, you have to tell me, how is it having a new driver in the house?
A new driver. Yes.
Not talking about a golf driver. I'm talking about literally a driver.
That's right. I have a 15-year-old who now is driving, which is stupid. I don't even understand it.
Are you terrified?
Well, so today our interview is with Joanne Musa, the Tax Lien Lady. And as I was trying my best to prepare for our interview, I felt a little bit out of control, a little helpless, if you will, because I don't quite understand tax liens. And you're going to understand that as I start asking really dumb questions of her. And as much as I can relate that to now Alexandria driving and sitting in the passenger seat as she's coming up the red lights and I'm trying to push the brake on my side, I'm like, is she going to stop? She's stopping. She did that. And as we, start driving and there's moments, right? I'm going to say she is a great driver so far. There's a few things we're still working on, like looking over your shoulder before you, switch lanes. That's one of those things that could be a real issue. And I think you're going to see that as we're going through this interview today, that tax liens, it is pretty straightforward, but there's a few potential issues, potential car crashes if you don't know what you're doing.
Well, I that's what I was going to say is I feel like we had to keep this high level because it could go deep in a hurry. I mean, Joanne's knowledge of the subject matter is almost 20 years in the making. And she said she learned some things the hard way. And I'm hoping that as you listen to this, you'll kind of borrow that from her and not necessarily pay retail as we talked about.
Well, you and I are right now in search of a business coaching relationship at a high level, right? I mean, we've gotten to a point now where we have, I can't even count the number of businesses. I know we got more businesses than you have shirts. That's a true story. When we get more business than I have shirts, we're really in trouble.
Yes, no doubt.
But we're going to need some help in that. And one of the reasons I bring up coaching is because I think of her as a coach with tax liens. And if this happens to be the path that you pick and you say, man, I really want to go deep in this. I like the analytical part of this. I like the really kind of straightforwardness of how this works. Then we would definitely encourage you to find a coach. And I think she would be a great one, someone who has been doing this and for 18 years. And she started coaching right out of the gate. So I really like that part of it, because sometimes people who are really good at doing something then want to try to teach somebody, but teaching someone how to do what you do and doing what you do is not always the same thing.
Yeah, no doubt. And I think you're going to pick up some things from her along the way just in today's interview that are lots of value, but we're going to be able to go deeper with her. If you already know you want to learn more about tax liens, we want to invite you into a special Q&A with her, as well as a free report that she's providing on the 7 steps it will take to create a profitable portfolio in this. Go to wealthwithoutwallstreet.com/tax liens, and you can get access to both of those, along with free access to our community if you're not already a member. But I think we've given a lot away already. Let's go ahead and jump into this interview with Joanne Musa.
Stallion, I love it when we get to hear what people would be doing if they got to financial freedom. The last one that I got to read, somebody said I would be driving and picking up my kid every day from school. That motivates me.
That is why you need to be a part of the community that is seeking financial freedom. Go to community.wealthwithoutwallstreet.com. You can join for free today. Welcome into the show. We have Joanne Musa as our special guest today. Welcome, Joanne.
Hello, it's great to be here.
well dressed in her Wealth Without Wall Street t-shirt.
Oh, yes.
I mean, this is an amazing
yes.
thing that you get to have when you're a guest on the Wealth Without Wall Street podcast is one of those swag t-shirts, Jeff.
So swag, man, no doubt.
I love my t-shirt.
Yes. Thank you so much for being on, Joanne. Excited to talk to you about tax liens. And for those of us who are not very familiar with tax liens, can you give us just a basic Investopedia type definition overview of what is a tax lien?
Sure. This is my favorite subject and one of my favorite subjects. And you know what happens when you don't pay your property taxes? If you don't know what happens when you don't pay your property taxes, you get charged a lot of money, penalties from the county or the local government that you pay your taxes to. Well, they need that money. So what they do in some states is they will sell the taxes to investors. And that is what gives you a tax lien. You buy those taxes and you put a lien on the property that is in first position.
So if you don't pay your taxes, Joey, the government's going to create a lien against your property that would prevent you from being able to sell it without paying off the taxes. Am I saying that right?
Yes. Mm-hmm.
And then the government, though, doesn't want to necessarily own those taxes. They want to start getting revenue. It's interesting. The government likes revenue. They like cash flow as much as we do, don't they?
Oh, yeah. They need it because they have to pay for school teachers, roads, building schools, firemen, policemen, civil servants. They need that money for that.
They need the cash flow. So then they turn around, it sounds like, Joanne, and they want to go find an investor, someone who wants to buy those back taxes. And so if I'm if I'm an investor and I'm just, for simplicity, okay, let's assume there's $1,000 of back taxes. It could be 10,000. I'm sure it could be 100,000. Depends on the size of property. Just for simplicity, it's $1,000 is what you owe. And you come in as an investor to buy that. How does that work? How much do I pay for it? Do I pay $1,000? What's the terms? How does that work?
Well, with tax liens, most of the places that sell tax liens, they will have an auction. And so either the interest rate that you're getting will be bid down, or the amount that you're paying for the lien will be bid up. Those are the two most common types of bidding. There are other types of bidding, and there are some states where no bidding happens at all, and it's a different procedure. But
I'm sorry, use real numbers in that example, just so I make sure I'm following you. I have $1,000 back tax, and you said now they could bid down the interest rate that I could get on that as an investor. What do they start at? And give us an example of what that would look like.
All right. Well, each state is different. Each state has their own statutory rate based on the laws.
Okay.
So in New Jersey, where I do a lot of my investing, it's 18%. So the bidding will start at 18% and bid that down in 1% increments from there. And then they can even bid premium. They could bid it down to 0 and bid premium. There's a reason why they do that I'm not going to go into here, but that's the only state where that happens. Now in Florida, they start at 18% and they can bid it down in 0.25% increments, down to 0.25%. And the reason they do that is because they get a minimum 5% penalty. So that's why they're willing to bid it down.
Just so that I'm following and tracking with you, and I know I'm asking the dumb questions. You're riding down the road like, Russ, you're a moron. You should get this. But if the person owes $1,000 of back taxes, there's interest and penalties that potentially are in excess of these taxes, right? And so is that what you're referring to? Is that the 18%, for instance, in the state of New Jersey, state of Florida, for that $1,000, there's 18, not only do they owe the 1,000, but they owe 18% on the 1,000 every year?
Well, that's what the investor will get. And it's also built into that $1,000. For instance, if they're $1,000 delinquent, that tax lien is probably for a little more than that, like $1,100, because there are already going to be penalties and interest built into that.
Yeah.
And then the penalties and interest that we were talking about is what the investor is going to get.
Right.
Above and beyond that.
When the lien redeems, because the investor doesn't get paid until the property owner decides to redeem the lien to pay it off.
Oh, okay. So,
walk us through that process.
yeah, how does that process work? So when I go and I bid for the lien, do I not pay the government immediately a check for the lien amount?
Yes, you do. You're going to pay them immediately for the lien amount. And in some states where they bid up the price of the lien, you're going to pay them for your whatever your bid price is.
Yeah.
And then what happens when the owner decides to pay it off? Now, in most cases, they are going to pay it off, because if they don't, you could come in and foreclose on their property.
Right.
So when they decide to pay it off, and every state has different redemption periods where they have to do that by, or you can foreclose on the property. Then you get paid, and you don't even have to, in most states, you don't even deal with that. They go to the tax collector or the county treasurer, and they pay them, and then that tax collector or treasurer will pay you.
Okay.
So it's all handled by the government. And
yeah, so you're not dealing with the homeowner at all. So I know this isn't perfect scenarios, but so it's $1,000 back taxes and I buy it and it's accruing at 18% interest on that. The government's still going after the homeowner saying you owe this, otherwise your house may get foreclosed on. They come back, they pay it. And the government's got the money from you as an investor for the $1,000, and then they come and they get I'm just going to call it $1,400 from the homeowner. They finally paid off the debt. Well, that's when the government turns around and says, Joanne, here's your check for this great investment you made, and they send it to you.
Yeah, exactly. I mean, it's kind of like having a CD, only you get a lot more than 1 or 2%.
All right.
And you don't have to put like $20,000 in there.
And you might understand now why we have Joanne on this call, because clearly Joey and I are not experts. Joanne is referred to as the Tax Lien Lady for a reason. And there's a history to this. You obviously have been doing this for how long?
I've been doing this since 2002.
2002. So you might know a little bit about tax liens. and that's why Joey and I really wanted to have you. We had a chance to meet you at one of the events that you were putting on, and it was kind of like, this is a question that we will get from a community member from time to time. I've heard about tax liens. I'm not quite certain what they are and exactly how they work, but I know that there's lots of books and people that kind of say, hey, this is something you ought to look into. Why was this an appealing investment strategy for you?
Well, I wanted to be a real estate investor. I thought that was the way to make money. And this was back in 2001, right after 9/11, and prices of houses where I lived were skyrocketing. I was looking for a house for myself, and my husband and I did not have the wherewithal. We didn't have the credit. We didn't have enough down payment. So I figured, well, I'm going to try this investing in pre-foreclosure thing. Well, prices were so high where I lived that a distressed house, a little tiny distressed house, was going for more than a couple of $100,000 in a foreclosure sale. So I had read about tax lien investing. There was just a little blurb about it in Rich Dad, Poor Dad, in that book, and in Multiple Streams of Income. And now those are two very popular books that a lot of people might have read, but they didn't really give you any information on how to do it. Fortunately, at the time, I lived in a state that had tax sales all the time. I lived in New Jersey. So I just started going to tax sales, and I learned by trial and error how to do it. I also met somebody else who had a lot more money than I did to invest. And he asked me, he was trying to figure it out too. He asked me if I'd work for him. So I hired 5 other people and trained them on how to do this, because in New Jersey, there could be a few sales all the same day, the same time.
Gotcha.
And then that's how I started training other people how to do this. And I even helped him develop a software for tracking liens. And then I realized there were people all over the country, really all over the world, who wanted to learn how to do this. And I started interviewing people from around the country, because anybody that tells you they're an expert everywhere in the country is not telling you the truth, because it's very different in every state. Every state has their own laws about how to do this. And I learned that. I put together a state guide. I started my website, taxlienlady.com, in 2005, and the rest is history.
Okay, I've listened to at least 5 podcasts. I'm now an expert in the infinite banking process. Maybe not, but yet I would love to talk to somebody about it. How can they do it, Joy?
It's as simple as going to freecall.wealthwithoutwallstreet.com. You can sign up for a short 15-minute call to see if this is a fit for you, and you can work with one of our coaches to financial freedom. Well, so it sounds like to me that this is a strategy that the barrier of entry is low in terms of the amount of money that you have to invest, and the returns are substantially higher than what you would get in like a traditional banking type of vehicle or instrument. Anything else about tax liens that was like your reason for wanting to pursue that?
Yeah, there's a few reasons that one is I did not have to do any negotiation, because the one thing that I didn't like to do, and the reason why I didn't pursue it at that time, the real estate investing, was you had to negotiate deals.
Yeah,
And
you had
so
to call
there's
people up and ask,
yes,
ask
yeah.
them why are you selling? Why didn't you sell? And yeah.
By the way, will you take 40% lower than what your house
Yes,
is?
exactly. I don't like negotiating that. Since
Yeah.
then, I've learned how to do that. But back then, I didn't want to negotiate. You didn't need good credit, and it was an alternative to the stock market. For
Oh,
me, it was a way that I could
Love that.
invest my money without worrying about the stock market.
I just got a
And you
chill
did,
when she said that, Russ. Like, just, man.
that's why I love you guys. Wealth
Yeah.
Without Wall Street, right? And the other thing was I could put little amounts of money away at a time. You know,
Yeah.
I had one lien where it was for under $500. I bought the original lien, and then I just kept every year paying the subsequent tax amounts. And I did this. Well, this was a long-term play. I did this over 7 years, and then eventually I, doubled my money on that deal. But for me, that was a long-term investment. There are ways to get money faster from tax liens that I do teach my clients.
Yeah. Well, and then this is, I mean, I know we're going to do a live Q&A inside of our community as you're driving down the road. You might know this, but if you don't, every week our guest agrees to come and do a live Q&A where we can really go deeper into how these strategies work, right? Because we want to allow them to share their screen. If there's diagrams, us right on our screens, and make this stuff come to life, because sometimes you're just hearing it and it's hard. And I want to make sure that we're helping you go deeper. So make sure you go to wealthwithoutwallstreet.com/tax liens. That's LIENS. Plural, right, Joe?
That's more than one.
That's more than
Absolutely.
one. And you're going to see when the Q&A is, how you sign up. It's in the community. If you're not already a community member, it's going to be a link for you to get access to that for free, because we want to share how you do that. But what I'm hearing you say, Joanne, is this is something that has a low barrier entry from an income standpoint, a credit standpoint, has a very significant return opportunity, but it also does require education. It requires learning, and that part is the active part in this. So you mentioned coaching people through this process. Explain what that even looks like. What if I were to try to learn about this? What does that entail?
Well, I learned by trial and error. That's how I did it. So it cost me a little money and a lot of time.
Yeah.
So what I do for people is I take out that learning curve. I help them through it. And I do that in different ways. I do have courses, and I have a membership program where they can get group coaching with me every month, plus access to free webinars every month. And every once in a while, I do a training, a 2-hour workshop. I have one coming up in August for the Michigan deed sales, and that's all included in that membership that I have. And then I also have courses where people can learn the different steps that I do when I invest in tax liens, and I also do coaching as well.
So how much learning is involved? Obviously you said you just started and you went down that road, and we always say there's 2 ways to get education. Either you can borrow it from someone else, or you can pay retail for it, right? I mean, there's 2 ways to go about it, and most of the time the retail is when we are like trial and error. The borrowing it means I am paying for that information, but I'm already paying for all the experiences, the pitfalls, and the missteps from that individual. But how long is the learning curve for something? If I was to try to teach, if you were not me, if you were to try to teach Joey, I know that's a tough challenge. If you were to try to teach Joey about tax liens, how long would it take Joey before he could really go out and start buying property or buying liens?
Not long. The first thing that you need to do is, and I do have a free report that kind of goes through those 7 steps that we're going to give to people. But yeah, the first thing that you have to do is decide where to invest, pick the right place to invest. So, and once you do that, the rest you could go through pretty fast, and it all depends on when those tax sales are held, because in some states they're only held once a year. So the thing is,
I'm sorry to interrupt you there, but Joey and I have been doing land flipping, and I remember early on that was the challenge. It was like, okay, where do we do this? And we don't care where, but I mean, where's there's money? Just point me in the direction. But it was like, well, which state do you want to do it in? Which county do you want to do it in? How do I determine where?
Yeah. So I have a state guide that kind of goes through what goes on in every state, so that you know what happens in each state, because it's very different. As I said before, some states don't sell liens. Some states just sell the property when you're delinquent on your taxes. So and some states do something in between. So you have to know what happens in each state and which states have better laws for the investors. And different states have different redemption periods as well. So you need to get all that information, and that's the first thing that I have my members do and give them access to.
Well, it sounds like there's so many different possible strategies with liens and deeds and properties. If someone wanted to go the route of doing exactly what you just mentioned briefly, was buying the actual property, or in this case, like buying the deed itself, not necessarily just having the lien, what would be the best way for somebody to do that?
Yeah, to go to one of these states that have deed sales, and some of them have deed sales online, but the thing is to pick the right state, because some states will not sell the property for back taxes. Normally, they will start the bidding at back taxes and it will get bid up from there, but some states will instead start the bidding at the assessed value of the property instead of the back taxes. So that's why it's important to know what happens in each state. And there are certain states that I like that are my favorite states to go to, and I do workshops on those those states.
Well, and it sounds like, I mean, just as Russ and I are interviewing people all the time, these strategies that people can use to get to financial freedom. We always talk about, you have to take control, then you have to pick a path. And this to me is another potential path, but how important is, when you pick that path, the coach, right? Being able to know what, if this is the strategy I want to go towards, I need to make sure I have the proper guidance. And so one, I'm grateful to have you being able to help coach people if this is the path they want to go. Do you mind if we use the 7 steps? Forgive me if I'm going to say it wrong. The 7 steps to building your profitable tax lien portfolio on that same link that we just mentioned for the
sure, we can
the Q&A.
Yes,
that would
we
be
can
awesome,
do that.
just so people can see that and have access to that information. It's wealthwithoutwallstreet.com/tax liens if you missed that earlier. So make sure go there to get her free report and access to the free Q&A within our community.
Okay, so Joanne, if we determine the state that we want to be doing this tax lien investing in, do you have like a pro tip for us on the best way to buy those? Is it to go to the auction, or is it, to go on Craigslist?
Let me just bust one of the myths that's out there about the best way to do this tax lien investing, because there have been a lot of experts and gurus that advise people, don't go to the tax sale because they're so competitive, because there are hedge funds now involved in this, because they've been looking for something safer than the stock market themselves to invest in, where they're in first position. But here's the thing. Yes, they are competitive, more competitive than they were 20 years ago. So most of the good stuff is going to get bought at the sale, and the leftovers are junk properties. Unless you're looking for land. If you're looking for single family houses, or good liens that you know are going to redeem, the way to get them is to go to the sale, not to get the leftovers, because there might be a needle in a haystack left over. There might be one nugget of gold in that list, but you've got to do so much work to find that it's really time intensive, and there is a way to do it right. You've got to do it right, because these things are first come, first serve. If you don't get it immediately when it's available, you lose. And people think they could just go anytime and buy the leftover liens. It just doesn't work like that. So I have other ways of investing without going to the tax sale, making your money faster on tax liens. I have other strategies that I teach, but I do not recommend that one.
All right. So you just mentioned a great myth there that maybe people have heard. What are some of the other common myths that you want to kind of debunk here on the show concerning tax liens?
Okay. One thing that gets my goat, you might say, is when other experts say it's government guaranteed, and people think, oh, I'm guaranteed to get paid. All I have to do is buy a tax lien. Well, that's not true. What they mean when they say government guaranteed is the rate that you're getting is guaranteed by government law. So if the stock market crashes tomorrow, if the real estate market crashes tomorrow, it does not affect your tax lien. If they want to redeem that lien, they're going to pay that interest rate that you're getting. If they don't redeem the lien, then you can foreclose on your property. But even if the real estate market crashes, what you paid for that lien should only be a fraction of what that property was worth anyway. Right. So it's still, you're going to make money on it one way or the other, right? But what really guarantees your lien is the property. It's real estate guaranteed. It's that you have something real behind that piece of paper. There's real property guaranteeing your lien. That's what makes it a good investment.
Joanne, I have real Bitcoins behind my Bitcoin paper. Now, they're not physical Bitcoins that I can put in my pocket, but they're as good as real Bitcoins.
Just like that IOU on Dumb and Dumber. It's just as good as cash.
Well, I know that there's so much that we could break down. As you're riding down the road, you could tell, like, we could ask Joanne 90 million questions on the subject matter. We just wanted to scratch the surface because we have limited time today. And I know that this is an interesting subject matter, so I want you to take advantage of the fact that Joanne is willing to give some free time, free advice in our community to do a Q&A. And I want you to go, as Joey said, you can go to sign up for that under what'swhilewallstreet.com/tax liens. And she's going to give away her 7 steps to building your profitable tax lien portfolio. And I think there's some probably just great nuggets in of that. But Joanne, I really appreciate you coming on the show. This is a really interesting subject matter, and thank you for wearing your Wealth Without Wall Street shirt. You're always welcome back. And I hope as you're walking around near Wall Street that you please take that with you. And that is definitely a way to get a one-up on them and the hedge fund group as well. Maybe at the next tax lien sale that you go to where all those hedge fund buyers are, you can say, get out of here, guys. But thank you.
I will wear this shirt to my next tax lien sale. Yes. I will.
Definitely do. And as you're listening, thank you for listening, and come ask questions of Joanne next week as we have her on this live Q&A, because you're going to ask a lot better questions than Joey did today.
Thank you, Russ. And thank you, Joanne. And thank you, as always, for listening to this episode. We'll see you next week.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry.